Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 8th of May, 2022. In this video, we take a quick look as to why next Wednesday could be an important day for gold and silver prices. We also look at what's happened in the past week and what we envisage will happen to those prices this coming week. This video is the same as the one we produced yesterday, which is our normally weekly update. If you haven't listened to that one, then you can listen to this instead. If you have, you can either listen again and enjoy, or click off, but certainly without doubt, please give us a thumbs up, subscribe, and press the bell sign for future videos. Without further ado, let's get on with it. Okay, let's look at precious metals. Gold fell $13 last week, falling from 1897 to 1884, having been as high as 1910 and as low as 1851, a fall of 0.7%. It actually held up quite remarkably well, to be fair. In sterling terms, gold finished the week at £1,526, that's up £18. And in euros, it closed at 1,786 euros. That's down 13 euros. Silver did not fare quite so well. It fell 38 cents, falling from 22.77 to 22.39, having been as high as 23.29 and as low as 22.13, a fall of 1.7%. In sterling terms, silver closed at £18.14, up 2 pence on the week. And in euros, it closed at 21.22 euros. That's down just over a third of a euro, 0.37. The gold to silver ratio rose again, of course, therefore, from 83.3 to 1 to 84.1 to 1. Now, what was our forecast for last week's trading range? Well, we concluded the video with the following comments. We expect to see gold trading between 1825 and 1950, with 1800 and 1975 as outliers. We see silver trading between 22 and 23.75 and 21.50 and 24.50 as outliers. We had quite a large spread simply because we knew the FOMC meeting was likely to cause some disruption in either direction. Well, what happened? Gold actually traded within our normal range, and so did silver. So we were very much on the ball. Now, the difference between gold's high and low ultimately was only $59. But that's a reasonable amount for gold. And silver's difference was $1.16, which seems to be par for the course of late, but not last week, which was a bit higher. And of course, the question on everyone's lips is, where will they go from here? Well, before we address that, let's look at some of the other financials that occurred last week. Bitcoin actually fell $2,500 and currently stands at $35,953. The Dow Jones closed on Friday down 98 points at 32,899 and proved to be down 78 points on the week. The S&P 500 closed at 4,123. That's down 23 points on the day and down 8 points on the week. And the Nasdaq Composite closed at 12,144, down 173 points on Friday and down 190 points on the week. So not dramatic falls overall, but the trend is clear. Brent crude closed at $112.39, unfortunately, that's up $5.25, and WTI crude closed at $109.77, and that's up $5.08 on the week. The dollar index strengthened even further and stands at 103.66, that's up 0.45 on the week. Now, we strongly urge you to listen to our video on Thursday, as we covered much as to what the Federal Reserve did on Wednesday and the market's reaction to their decision to raise rates by 0.5%. Ironically, even though the Fed said it was likely to raise rates in the next 2 months by 2 additional 0.5% rises, the market initially viewed it as dovish talk, as they anticipated the possibility of a 0.75% rise. However, since then, a couple of governors have stated they are indeed hawkish and would have liked to have seen much higher rates and could envisage that possibility moving forward. The effect, therefore, was to ultimately drive the dollar up and yields too, and then caused markets to fall back again on Friday after Wednesday afternoon's and Thursday's initial euphoria. Now, let's just take a look at the economic news, which did have a bearing, but nowhere near to the extent of the FOMC's decision. While looking at the economic data, we can see, let's go through last week day by day. The S&P Global US Manufacturing PMI came in at 59.2, marginally less than expectations of 59.7. The ISM Manufacturing Index also came in lower than expectations by over 2 percentage points. And construction spending was also lower in March than both what was achieved in February and what the market expected. Then job openings actually slightly higher in March, but job quits were also slightly higher. Factory orders, though, were better than anticipated, and motor vehicle sales in April higher than those in March. Now, looking at the first of the employment reports, we can see that in April, the number of jobs, 247,000, against expectations of 390. Of course, ultimately, this figure is going to decline because as the US approaches full employment, then the number of jobs created will, of course, reduce. The ISM Services Index, though, was lower, like the Manufacturing Index, by over 1%. Then we had the FOMC statement, which raised interest rates by 0.5%. Then on Thursday, the initial jobless claims, which actually rose slightly. And the continuing jobless claims, however, fell. The all-important non-farm payrolls on Friday was strong. We had 428,000 new jobs against expectations of 400,000, equal to those achieved in March. That was a little surprising because a few people expected that figure to be lower. The unemployment rate, however, did dip up slightly higher than expected, but equal to the previous month. Average hourly earnings, though, were down, and the labour force participation rate between 25 and 54-year-olds was also very marginally down by 0.1%. So overall, we would say a balanced financial data report. Now, coming this week, we have on Monday consumer one-year inflation expectations and 3-year inflation expectations Q1. Tuesday, the NFIB Small Business Index for April. But Wednesday, important, Consumer Price Index, Core CPI, year over year for April, so month over month and year over year. That's going to be a key figure and could have an effect, quite a serious effect, on what's going to happen in terms of prices for commodities in general and gold and silver in particular. Thursday, we have the initial jobless claims, but we also have, and we'll keep a look at this, the Producer Price Index final demand. And then on Friday, the Import Price Index and the UMich Consumer Sentiment Index, which will be interesting. So the key day next week, or this coming week, to put it in those terms, is Wednesday. So, in view of all this, what can we really expect to happen to gold and silver prices next week? Well, first of all, we should not forget the geopolitics of Russia and Ukraine, and any significant change will have undue influence in either direction. Technically, gold has proven quite resilient and appears to have support at the 1850 level and resistance just above the 1900. However, we would not be surprised to see gold attempt to branch down ultimately to 1800, if not necessarily this week, within the next 2 weeks potentially, providing, and this is the important part, the dollar index continues to hold strong. If not, then gold trading between 1850 and 1925 could be the order of the day. Silver certainly has support at 22, but if it falls beneath here, then really the next strong support level is 2150. with ultimate support as we see it at $20. $23.29, which was last week's high, will act as resistance, but $23.50 perhaps stronger resistance. Now we're somewhat undecided, frankly, as to the direction of gold and silver will take this week, simply because we had a sort of reversal of fortunes last week. Twice the markets fell, then they rose, then they fell, then they gravitated back a little. So even the market is undecided. What we can say is that we suspect that much really depends on the CPI figures on Wednesday. Now, our natural sentiment in this marketplace is really to expect lower prices, though we are acutely aware that analysts are forecasting in the main slightly higher prices. We're not totally convinced the markets have fully digested the news that was announced last week as yet. Now, of course, any continuing fall in equities or a worsening situation in Ukraine could indeed act as a prop for precious metal prices. Though, should we see some alleviation here? In other words, if equities start to rise again and maybe the Russian tensions look like it's coming to some form of conclusion, though we can't quite see that yet, we could have quite a reasonable percentage dip in prices. So what are we going to expect this week? Well, we see gold broadly trading between 1825 and 1925, though we suspect at one end of the scale it will be breached. So we're basically saying our outlier range is broadly between 1800 and 1950. We see silver trading between 2175 and 2325, with 2150 and 2350 as outliers. But of course, any form of success in Ukraine-Russia situation, then those figures will definitely move down towards the lower end of the scale. That's it for now. What do you think? Do share your thoughts, please, and subscribe and press the bell sign. And tomorrow we shall repeat this video as it's going out quite late today on Saturday under a different thumbnail. Thank you for listening. Until our next video, have a great weekend, and as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.